Well, the day is changing moment by moment, so let's go to Grant White, portfolio manager, investment advisor with IA Private Wealth, to talk about all of the shifting. Thanks for joining us today.
Thanks for having me.
So recent news now, tariffs will not apply to anything covered under the North American agreement. We think. We always have to add that caveat with Donald Trump. How do you see this playing out on the markets? It feels like there wasn't enough time to really shake out. So I'm wondering what you foresee this change to look like.
Yeah, I mean, we're in this like snip, snap market environment right now where things are, back and forth every single day. I mean, this week, even day by day, within the day, things are moving quite frantically, obviously. And so with all this uncertainty that's out there, it's just causing that type of market movement. And so what we're really looking for, and what we will find eventually, but we're really looking for is this certainty around what the tariff situation is going to look like, one way or the other, because once we have that, then the markets can start to look forward again and start to focus on, okay, what are the fundamentals going forward today related to these companies? So I expect that, this is the environment we're in. I mean, this year is going to be a lot of volatility. I don't expect that we're going to see this stopping anytime soon. And I think that investors need to prepare for that. But there are opportunities in that at the same time. And that's what we need to be prepared for. So yeah, it's a really good opportunity to look at your portfolio and say, like, what are we owning? What is likely to do well coming out of this, and maybe we need to look to other parts of the world that we haven't looked at before.
Okay, so what does that look like to you? So if you're an investor and you kind of want to reduce the impact of the volatility and not, as you say, have to pay attention moment by moment, minute by minute, and try and readjust, forward looking, what do you do? How do you try and shield yourself?
Yeah, well, I don't think that there's any way to necessarily completely shield yourself, because obviously we're dealing with a global impact and as it relates to these tariffs. And so I think you need to be just prepared for that and have your portfolio designed in a way that you can withstand and weather these storms. Having a globally diversified portfolio, I think right now more than ever, is a really good idea, because you're going to have the diversity to guide, like to literally ride the rapids that we're facing right now. Now, it doesn't mean that you should be scared off of anything though either. I mean, there's some really good companies that are being impacted in the short term here, and trying to predict the ups and downs of that is a futile exercise, as we know. So I'm very cautious. I caution investors about this: is don't make knee-jerk reactions right now. Like, this is changing. In the last segment you mentioned it, changing minute by minute, day by day, month by month. You don't want to give up good assets at a time like this just because of what's going on today. So holding your good assets is a good idea, but having a more globally diversified portfolio will also help you to, to shield to some extent, but really to ride the rapids here and come through on the other side. But you have to be open to new opportunities. It's hard to do right now, but you have to be open to opportunities in the portfolio too.
Okay, so what are you liking right now?
Well, there's a few companies I like right now. I mean, we're looking a little bit off the board to try to find opportunities, and I think more are going to present themselves. But I think, as I've been saying for the last 6 months to a year, you got to look outside the Mag 7 to try to find those opportunities right now. And so C Limited is a company that we really like. We've liked it for a long time. Arguably, we bought it too early, but we've owned it for 3 or 4 years now. But at this point, like, we really think this company is coming into its own on where we thought it would be even earlier. Especially on their e-commerce side. Their e-commerce platform called Shopee is achieved great profits over the last year. They've really shot the lights out. It's kind of been a bit of a Amazon-like story, an Amazon turnaround in terms of going from losses to big profits. And that's what we're seeing. So I really like C Limited from an e-commerce perspective. And for most people that don't understand it, this company is based out of Singapore and does very Amazon-like activities in that part of the world, Southeast Asia. So it's kind of like owning Amazon in a different location. So that's one of the companies that we really like right now. We think that their growth is going to continue to be strong for some time to come. And again, they've achieved great profitability in the last year.
So are they operating out of Singapore, but are they operating in other markets, or are they Singapore singly at the point?
Why you like them is because they have, this is a bit in these e-commerce companies, like really we look at them as a platform. So it's e-commerce, but it's also cloud computing and other things. And why you like them is there's a bit of a turf war in the world as it relates to these companies. Like, obviously Amazon has a stranglehold in North America, but you got a company like C Limited, which is really, really strong in the Southeast Asia region. And then you've also got companies like Mercado Libre in Latin America and South America that also has that same benefit of strength and infrastructure that it's really hard for a company like Amazon to break into. And so when you look at other parts of the world, if you really like Amazon here, there's other companies out there that you can buy at better pricing than Amazon right now because they're just less well known in North America. And so you get the same kind of effect. It's not necessarily, I mean, these companies, if they were based in America or in Canada, they'd be worth a lot more than they're trading at today. But you're getting that quality of a company just in a different part of the world.
Okay, so if you want to look closer to home, what are you looking for?
I still love CNQ, Canadian Natural Resources, one of the best Canadian companies out there. There's obviously some challenges right now related to energy. Tariffs are going to impact profitability. Oil prices being lower are going to impact profitability. But, this is still a really good quality company and in fact, just hit records for their levels of productions in Q4 of last year, or in the overall year in 2024, I should say. So it's a fantastic business. Why I like them, and if you like Canadian energy going forward, which we do, this company has proven that they can still produce profits even at lower oil prices, even much lower than what we're seeing today. And so if you have any concerns about oil prices, CNQ is still a good one to hold. Great dividend, great management. It's a growing company, and we still like them going forward. Throughout all of this turmoil, I think they're going to look really, really good. And I think that right now you're going to get them at a pretty good price as well.
Grant White, great to talk to you. Thanks very much for coming on the show. We really do appreciate your time.
Yeah, my pleasure. Thanks for